I'm going to continue to buy into these sell-offs because in my firm belief, all of this market uncertainty and doubt is temporary. Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be talking about the crypto market landscape, giving you guys a call to action, really attempting to push for your education here at CYPRX. I cannot stress enough that now is the time not to be distracted by the hype, the hopium, the bullish moon boys that were cool in the last bull cycle, giving emotional feedback to you guys surrounding their content and just straight up manipulating the crap out of average retail investors that deserve much better. I hope to show you guys that there are communities out there like ours here at CYPRX that are actually pushing for people's education in this space and not manipulating your brains into thinking one thing when the other thing happens behind the scenes. It's just so depressing to see this unfold in real time, considering the age of information that we're in. So let me rant to you guys for a little bit. We're going to be looking at some inverse correlations here. We're going to be talking about the crypto market landscape. Keep in mind that even though short-term price fluctuations are happening to the downside, we are long-term bullish in the digital asset ecosystem. But here at CYPRX, we take our education serious and we deliver institutional insights both fundamentally and via technicals. All right. And we'll get into that as well in today's video breakdown. So I wrote this post here for you guys just a couple of seconds ago, and it says here, many believe the biggest Ponzi in crypto are hacks, exploits, or rug pulls. But in my opinion, it is blindly following uneducated influencers who push their audience to buy and sell at the wrong times. And these people do exist. Just go on your own time today and look up Trump crypto reserve announcement and look at how many influencers on the internet yesterday posted a video breakdown that got thousands of views telling everybody that this is the moment. Oh my gosh, crypto's going to the moon. Trump announced this, Trump announced that. Buckle up your seatbelts. XRP is about to hit a brand new all-time high. But nobody warned people about the market uncertainties that are still lingering in the digital asset ecosystem. In my opinion, it is blindly following uneducated influencers who push their audience to buy and sell at the wrong times. I cannot imagine being a new participant in crypto yesterday, watching the market jump by $300 billion and joining in on the hype because an influencer said so. Obviously, of course, to each his own. You should never be taking financial advice from any influencer on the internet, but people do. Take yesterday's crypto reserve announcement from President Trump as a perfect example. Every single influencer made a video on the crypto reserve announcement drama yesterday, but who actually warned their community to be cautious, taking a mature approach instead of reacting with the herd? Today, we are seeing the total cryptocurrency market cap bleed over $300 billion shortly after, due to continued market uncertainty surrounding Trump tariffs and geopolitical tensions, increasing demand for safe haven assets. Now that everyone is fearful, and now that prices are discounted, we here at CYPRX look at this as an opportunity to buy when everybody is fearful and when prices are at a discount, not when the market is hypeful, hopium-driven, euphoric, and prices are pumping, okay? Now more than ever, it is critical to understand risk-on, risk-off fundamentals and know when to deploy capital, when to stay patient, and when to avoid chasing hype. I encourage you guys to follow influencers that actually educate you. I'm not saying here at CYPRX we're the only ones out there because there are many others. Follow influencers that are actually here to educate you guys, okay? Hype and hopium influencers, like I said, were cool the last bull market cycle, but in order to survive what is coming, you will need resources. You will need educational foundations to give your portfolio an edge in this space. And if you're not taking that approach, you're going to continue to think that crypto investing is just about having a mobile app on your phone and just randomly dollar cost averaging in. And people that actually take a mature, logical, and critical thinking approach into these markets to build a strategy and a foundation for themselves are going to surpass you tenfold. You don't want to be one of those ignorant individuals that just aimlessly follows bullish moon boy, hopium, and hype-driven content, okay? So here at CYPRX, on March 2nd, 2025, yesterday, when we noticed the rest of the market was euphoric and pumping, again, we tap into institutional fundamentals, we read institutional documents, and we have an institutional scalper with over 13 years of hedge fund experience in our private community that delivers insights to our community via institutional deltas that no other community on the face of this internet has. I said to you guys in a post, I encourage you all to think logically, to think critically, and to remain adaptive. Today's positive news is a great reminder to approach these markets with logic and critical thinking, not emotions. Adaptability is key in navigating volatility. This week, our focus shifts towards geopolitical tensions, Russia Ukraine developments, and Trump's tariff announcements. Economic data with US PMI figures, labor market figures, and unemployment rates, along with NFP. The Fed outlook, considering that we have Jerome Powell's speech later on this week, furthering any Fed rate cut expectations. While Trump's strategic reserve announcement has fueled recent risk on sentiment, we must remain aware of other fundamental risks that still remain. Any PMI or upbeat labor market data that stokes recession fears or comes out extremely upbeat, delaying expectations of future Fed rate cuts could shift market dynamics. Additionally, tariff uncertainties or geopolitical tensions could also increase demand for safe haven assets. Stick around. I'm going to show you how that is unfolding right now in real time. One critical factor to watch, this is important as we're going to get into inverse currency correlations. One critical factor to watch that weighed on risk assets in February was the recent yen strength, with the Bank of Japan turning more hawkish amid stable economic activity and persistent inflation. Markets could continue to price in increased probabilities of rate hikes from the Bank of Japan. Increased yen strength tends to make the yen carry trade less appealing, leading to unwinding of previous yen carry trades. Stay sharp, stay ahead, and remain adaptive. I'm reading this to you guys to show you that we were one of the only communities in the euphoria yesterday actually trying to educate people, and we get no views here. I'm not here for the views. I'm here to tap into the like-minded individuals that actually want to have a solid portfolio, that actually want to make money in this space. Everybody else, in my personal opinion, is irrelevant. And you should block out the noise, okay? We are here in this space to make money. We are here in this space to see long-term gains. We are here in this space to see short-term gains. Now is the time to tap into education. I encourage you guys. Keep in mind, I'm not sitting here saying that we are the only educational platform on the face of the internet that provides these types of insights. If you want to go out there and find them for yourselves, there are other communities out there. I'm here to show you guys that we are one of them. All right. So in the private community, reading some of our messages, okay, considering that XRP today is down 18%, XLM down 15%, HBAR down 14%, sold 19%. You guys get the gist, right? Blood in the markets today. Total cryptocurrency market cap as of right now has shed over $300 billion. And you can see via the screen share, if you take the post that I made for you guys the other day on the 2nd, when everybody was euphoric and buying into the President Trump crypto reserve announcement, we here announced to you guys at a market top, at a local top, not saying that this is the top or anything like that, but at a local top, we warned you guys that uncertainties still persisted in the market. What were these uncertainties that we were bringing to your attention? Again, if you can take our tweets, you can copy them and paste them onto the charts, and you can see where we put this information out, right? Here's that info. We were talking about yen strength. We were talking about geopolitical uncertainties, Russia-Ukraine situation. We were talking about trade escalations and tariff implications, weighing on market uncertainty and creating more demand for safe haven assets, right? Again, actually putting out valuable educational material. Then today, what do we see the day after? Trump reiterates plan to double China tariffs 20% from 10%. We also see Canada is ready to retaliate against the U.S. tariffs, foreign minister says, right? We also saw breaking President Trump has halted all weapon sales to Ukraine and considering freezing weapon shipments from the U.S. stockpiles. The U.S. will also no longer finance weapon purchases for Ukraine. If Zelensky wants an endless war, he will have to pay for it himself. We are out, says President Trump. Okay? This is all creating market uncertainty. And what is it doing? It is driving demand for safe haven assets. Here you can see fundamental retail articles the day after. This is from the 3rd of March, 2025. Gold price rallies on safe haven demand amid trade and geopolitical tensions. You see, people, what we were trying to tell you guys the day before, always trying to put information out before it comes out to the manual retail crowd. Here is another fundamental piece. Japanese yen gaining strength amid tariff jitters. The Japanese yen remains on the front foot against its American counterpart heading into the European session on Monday amid hawkish Bank of Japan expectations. Investors have been pricing in possibility of more interest rate hikes from the Bank of Japan, which remains supportive of elevated Japanese government bond yields and continues to strengthen the Japanese yen. Right? What did we tell you guys would be one of the factors that could weigh on risk sentiment, i.e. today? When yesterday the market was euphoric. We talked about yen strength here. Again, geopolitical tensions, right? We talked about trade war uncertainties. All of the things now that you're seeing unfold in real time, here at CYPRX, this is what we follow because this is what the banks, the large institutional investors, the hedge funds, the asset managers, this is what they're paying attention to. They're not paying attention to moon cycles or astronomical alignments. They're not paying attention to hype and hopium, right? They are paying attention to the stuff that matters, and we encourage you guys to do the same. All right. I'm not here in an attempt to say, I told you so. I'm here in an attempt to wake you guys up and see that you can strategically position and align yourselves with these current market conditions to win instead of being manipulated and lost like the rest of the average retail crowd. Okay. Just as another example, in our private community, you can see here some of our community members. Paulie888 said, comments like this is what makes me happy. I joined CYPRX. Without research and market updates, I'd probably be a blind investor. And we can see an XRP Army member, I'm assuming that he probably claims himself to be one, is saying, why the F is XRP and the entire market crashing so hard? You do not want to be following influencers that have no idea why the market is doing certain things. Here at CYPRX, you can see timestamps are extremely important to us. I said to my private community in my private analysis section, which people get access to in the Discord if they choose to join our mentorship program. On the 1st of March, one thing I'm paying attention to is the total cryptocurrency market cap, and this recent bounce has not been able to create a new higher time frame high, breaking above previous bearish price action and continuing to recover by holding bullish order flow. So right now, this is looking like sellers just taking profits. If the total cryptocurrency market cap can break and hold bullish above the $2.83 trillion threshold, then maybe we can start to consider this an actual bullish reversal. But for now, I would be cautious until the above scenario happens. Markets are still sensitive with all the recent tariff talk. And again, this is before the news plays out. One of our mentors, our institutional scalper in the chat, was also mentioning the same thing, that we haven't seen any evidence of buyers overpowering sellers yet. And honestly, the recent bounce that we've seen in crypto, i.e. yesterday, just looked like sellers taking profit, right? Now, on top of that, we have institutional delta zones. So our institutional scalper today was letting our community know where institutional sell volume was at, how the Trump news yesterday pushed price up into a premium, but there was no real buying momentum afterwards, and fresh selling came into the market right after that, retesting previous sell volume, right? From an institutional perspective, I cannot stress enough that this is the type of insightful information that you want to have access to. You do not want to be a confused investor in this space right now that is just straight up being manipulated by influencers that have no idea what the heck they're talking about. Now, considering the strategy that I've talked to you guys about here publicly on the CYPRX YouTube before, on days like today, where the market is down via the total cryptocurrency market cap, Bitcoin included, over $300 billion, these are the days that we look to go in and deploy our hard-earned capital, our dry powder. We do not want to be buying into the hype. Now, I'm not sitting here saying that the market is finding a floor or that the market's going to completely reverse from here. But days when price action is discounted like it is today, that is when you want to be deploying capital, at least from my personal opinion, not buying into the hype. Okay. You do not want to get wrecked by misleading, misguided investors in this space that have YouTube channels that are telling you guys to buy and sell in the wrong areas. Now let's talk about these currency correlations, because in this post, we talked about the Japanese yen strength. I just want to show you guys this inverse correlation that is taking place right now, considering that we are seeing a massive demand for safe havens, considering the market landscape and the uncertainty that is predominantly driving market swings. Okay. We can see here, just looking back in February, all right, when the Japanese yen increased in strength from February, it was roughly about a Thursday, February 20th. The Japanese yen increased in strength significantly. That reflected in bearish price action in the total cryptocurrency market cap. The same exact date that the Japanese yen significantly increased in strength was the same exact date on Thursday, February 20th, that the total cryptocurrency market cap broke to the downside out of its month-long consolidation and dropped all the way down into $2.5 trillion. You can see this bullish green circle right here when the total cryptocurrency market cap bounced and had a nice significant bounce, where we mentioned in our private community, we were seeing this as sellers just simply taking some profit. You can see this was on the 28th of February, which was Friday last week. At the same exact time, inversely correlated, we saw some profit taking on the Japanese yen. Then over the last 24 to 48 hours, you can see the total cryptocurrency market cap starting Sunday into Monday has shed over $300 billion. Inversely correlated, the Japanese yen on the opposite side of the spectrum on the left-hand side has significantly increased in value. So one thing we are going to continue to remain adaptive on and watching is this yen strength, i.e. safe haven demand. where because the markets are pricing in higher probability that the Fed is going to cut rates, we've also seen recent dwindling US economic activity and we've seen contraction in certain figures in the US data. This has made the yen as a safe haven more appealing than the United States dollar, coupled with gold, obviously, of course, also in that safe haven basket. So if we continue to see market uncertainties, if we continue to see trade war implications escalating left and right, we continue to see a pushback on peace talks from Russia, Ukraine, because President Zelensky isn't being cooperative. We continue to see inflationary fears. We continue to see recessionary fears. These are all going to be things that are going to lead to increased demand for safe haven, more appeal in yen and gold, and create less appeal in risk assets. I'm going to continue to buy into these sell offs because, in my firm belief, all of this market uncertainty and doubt is temporary. But what I'm trying to get you guys to see is you don't want to, in these tiny little price swings in the environment that we're in, you do not want to be positioning yourselves on the wrong side of the market intraday because it is going to manipulate you. It is going to steer your portfolio in the wrong direction. And you're not going to benefit from any short term price appreciation, which helps your mindset long term. When you see appreciation in your portfolio, after you're just dollar cost averaging in the right areas, it gives you such a boost of momentum and motivation when you're actually making money in the space short term via your long term positions. Okay. I cannot stress enough that now is the time to tap in and understand some of the dynamics in which I covered in today's video breakdown. If you guys want to tap into our private Zoom calls, where we host Zoom calls at least 2 to 5, sometimes even 6 per week, you want to read our handwritten, typed out fundamental reports that we deliver to our private community, talking about exactly what I covered in detail in today's video breakdown, and you want to learn more about the markets in which you're operating in, come tap into our private Discord. We'd love to have you on the team. We'd love to give you guys a better sense of awareness of what is actually happening in the space instead of just following all the bullish moonboy hopium and hype that is out there surfaced on the internet right now. As always, none of this is financial advice. Just because I buy into these fearful situations when the market is down over $300 billion, I look to deploy dry powder. I'm not telling you guys to go out there and to deploy dry powder because the market bottom might not be in. Like I said, we need to be adaptive to market conditions that change on the drop of a dime, and understanding those conditions and how to react to those conditions is what gives you an edge in the market and an edge in your portfolio. With that being said, as always, be cognizant. Please be aware of who you're following and what information you're soaking up out there. I cannot stress enough that we live in an age of information. And if you're choosing to follow these influencers that have no credentials, that don't know what they're talking about, that only feed into the mainstream hype, you are choosing a path of ignorance. And that is not the path that is going to make you successful in these markets long term. With all of that in mind, do us a favor before you head off here, smash that thumbs up button, subscribe, especially if you've been paying attention to the fundamental breakdowns that we've been delivering both on X and on YouTube. And I will see you guys in the next video breakdown.